go straight into the panel discussion of the budget for 2022. A lot of expectations from the market, from the industry. Not much tweaking as far as the tax regulations are concerned, but overall, from a growth perspective, there is a lot that has been done. Of course, the proof of the pudding is in the eating. We'll have to see how all of that is going to be implemented. But I am really looking forward to this session with our eminent panelists as we walk through the key provisions of the budget and hear their views on what, from their industry, what this budget means to them. And without much ado, may I pass this over to Shekhar for his keynote address.
Good morning, Tapti, and good morning, Sunil. Welcome to all panelists on behalf of Bangalore Chamber of Industry and Commerce. And welcome to all participants today. I thank you so much for participating in today's budget panel discussion. And I have two roles to play. One, as a president of Bangalore Chamber of Industry and Commerce, gives certain comments on budget. And being a direct tax professional, gives some thoughts on my views on certain amendments in the tax amendments. And then giving it to my good friend M.R. Venkatesh to talk about macroeconomic perspective and economic indicators. And then finally, we'll go for a panel discussion. And we have eminent panel today consisting of all top-notch CEOs and top-notch finance professionals from Bangalore. It's one of the best panels that we can ever have on budget discussion. I thank all the panelists. Now, when you come to the budget, there's too much of expectations on the budget. And of late, the expectations of the budget is never met by any of the finance ministers in the last 4 or 5 years. There were multiple reasons. The first reason, of late, I can see the finance minister in the last 2 years doing some sort of interim announcements, interim budget policy measures through a press conference and through a PPT. And in my humble, which I've been having the view for quite some time, budget is nothing but a reflection of the estimated of expenditure and the receipts. And where are you going to spend, which areas you are going to, and what are the priority areas. And the secrecy that is surrounding the budget on the tax rates has become irrelevant in my view. Those days we used to have central excise and customs where the dispatches and all those things will be blocked. Nowadays, everything is come under GST. There's no need for such a secrecy on the budget tax rates. Income tax rates in the corporate, you don't need a secrecy. You know, all the budgets, barring certain few provisions which came a retrospective amendment, all the amendments are only prospective. Though I'll be commenting a couple of amendments on the retrospective base, all the amendments are only prospective in nature. And in my view, the entire direct tax amendments or proposals from the budget should be delineated. And it should be published at least 2 months before the budget for the public comments. Take the public comments and get passed as a part of the finance bill. In my view, there's no need for such as provisions in the budget, which goes unnoticed. Even if we raise the issue, it doesn't get accepted. Therefore, in my view, the government should start taking away the direct tax proposals from the budget and make it a separate one 2 months before the budget. Invite for the comments from public, taxpayers, and then take it as a part of the bill. That would make more sense. The reason is that the amount of expectations that we have, the stock market indices go up and down, and everybody has got their own expectations, creates unnecessary and unwanted pressures on everybody. In my view, more than a pressure, it is our own thinking process that should get changed. And I would strongly urge the finance minister. In fact, BCIC, Bangalore Chamber of Industry and Commerce, suggested this. In fact, we are going to make one more suggestion to the government that time has come for the finance ministry to remove the direct tax proposals from the budget, keep it separate, and make it through an independent evaluation 1 or 2 months before that. Now, when you come to the budget, we are coming through a recovery. Probably people may say U shape or a V shape or a W shape. I'm not getting into the which shape of the recovery, but we are coming through a recovery of the huge COVID issues. There is certain amount of challenges on the industry that has faced. Manufacturing started picking up. GST collections are gone. you have a significantly increase in GST collections. Direct tax collections are also picked up. This is a record collections this year. Market is also booming up very well. Then unfortunately we had this Omicron. With the result, again, the sentiments have gone down. So it's some sort of a fluctuation that we face. Amidst this, the government is coming out with various proposals. And if you look at in the last 3 years, the investment from private sector is not much compared to investment from the public sector and the government's investments. So therefore, in fact, me and MRV, when we spoke on the COVID recovery, what the Indian government should do, I remember both of us had only one philosophy stating that the Indian government should become a midterm funding agency for all the industries. Do not collect GST for some point of time. Request all the industries to use the GST amount, plow back in the industry and pay after some point of time. Give more credit facility for all the organizations so that the availability of funds will become easier and much cheaper rate of interest. In this budget, if I look at it, I come across 3 important features of the budget. Number 1, it's a time-tested theory. So, though Finance Minister talked about Mahabharata, probably the Prime Minister and the Finance Minister follows the adage of what said in Arthashastra. In Arthashastra, it is said when you are facing through a recession, go for a high infrastructure. What Kautilya advised to Chandragupta, when you are going through a recession, spend money on revival of tanks, spend money on constructing lakes, spend money on creating infrastructure because it creates an employment for your people. It creates a huge infrastructure for your people in the future, and it becomes a self-sufficient economy. That's what Kautilya said in Arthashastra. Probably this government also believes in that without saying that. The amount of infrastructure spent and the capital spent what this government has put in for the current year budget is phenomenal. It's almost 10.2 lakh crores if I include even what is coming to the state government funding for the capital expenditure. 10.3 lakh crores is phenomenal amount when it comes to an economy like India. In fact, when Kamal invited me for his Volvo innovation discussion, there's a gentleman who presented about infra spending in Volvo's meeting. And when he told the statistics that day, I could not believe what he said, but later on I went and verified what he said in the correct. Our infra spend is 3 times of the US infra spend. US infra spend is spent over 7 years, whereas our infra spend is spent over between 3 to 5 years. That is a comparison. And this kind of infra spend and capex spend is important to revive the economy, and therefore I would like to applaud the government for taking that key step that the government will be a key spender in this economy, creating an infra spend and a capital spend. The second important area that the government, in my view, touch is about technology and digital. Earlier, we all know that technology was only a backbench. It was only what I would call the back office or backbench. Technology was not at the forefront. Whereas if I look at through this budget speech, every aspect of the government proposal is linked to a technology and the digital. Technology and digital is occupying the front stages in this budget, including, which is a very, very welcome proposal, where the finance minister said all the ministries payment, they are going to introduce a system and the technology from end to end. The payments to the governments and the government organ will be through a technology, which is a more important because eliminates the what I would call the repeated follow-ups for that. It puts a lot of transparency in the administration. That's the second important measure. The third important measure, which I was very happy and pleased yesterday, is about defense spend. More than the defense spend, they said that 68% of the defense purchases is going to come from Indian companies. It's a great phenomena because when you're going to purchase from domestic, cost is also become competitive. And it is also important, it gives a lot of scope for defense manufacturing companies in India, which is an important growth sector for the country. The other critical area in the part of a defense, which I was very happy to note, is about the R&D spend. 28% of the defense spend is earmarked for the defense R&D. And I'm very happy about the defense R&D, because when we talk about an R&D, we always talk about some alterations, some minute here. And the defense R&D is very critical, allowing private and the startups to be participating in that. So it's a great initiative from that perspective. The other initiative which did not get noticed anywhere when we went through the budget, post-budget analysis, because everybody talks about tax rates for individual, tax rates for corporates, it got buried, except one or two people said about that. The DPR has been ready for interlinking of 4 rivers. It's a phenomenal concept. Absolutely a great concept. We have been talking about the interlink of rivers from Ganga to Kaveri, but this government made a proposal of feasibility report completed for interlinking of 4 rivers. And subject to the politics, subject to the elections, and subject to all the state governments agreed, which I'm sure when GST was proposed, nobody gave a credit to the government that this government will bring GST and introduce GST. And this government introduced GST, made amendments. Now the GST collection is first time high in from 2017 onwards. So I'll still give credit to this government for sure that if this interlinking of rivers gets completed in the next 4 to 5 years or 6 years, the amount of infra growth, the amount of employment generation, the amount of industrial growth that is going to happen is phenomenal. In that way, I'm quite applaud about this budget. Few other areas which I would like to touch before I'm going to my tax proposals. MSMEs. This one sector that has received always a stepmotherly treatment from the government, though there is always they talk about MSME. I would have been happy had the government proposed more measures for MSME, except there's an export guarantee credit limit of 50,000 crore additional, and then additional 1.5 lakh crore through other credit limit, and 6,000 crore for ramp scheme. That ramp scheme of 6,000 crore should be at least increased by another 10,000 crore, because MSMEs needed that. Today, MSMEs they need to wait for that. Plus, there is a reduction in the customs duty on some of the products which the MSMEs are going to buy it, which make the input costlier. And with this, the MSME should be able to manage it. But there is one counter provision under the income tax in section 43B. When I'll touch about that, which is unwanted provision, which is going to impact MSME significantly. So I would hope that government takes though the government is understanding the pain of MSMEs, one side you are creating a huge infra spend, one side you use a capex spend, but look at MSMEs in a better manner, in an empathetic manner, so that MSMEs should get adequate attention from the government in the form of funding and in the form of capital support. Government has recognized the startups, and startups have got a lot of, I don't say a lot, I would say that extension period from the income tax that is being given so that you get more time. We have been advocating some of the measures from the startup on the capital gains side, which is not addressed, which I hope the government will address in the days to come. And the government has also recognized the ease of living for startups. And the government said they're going to start formulate a committee to go through this ease of doing business 2.0 to make sure the startups have got adequate one. Now, when I look at the overall provisions, I look at this on a more positive side, more from a strategy side. Of course, there are various other measures on education, digital. I can keep on talking it, but suffice to say, I'm not getting onto that. Suffice to say that government has made a sincere efforts in making sure that the public spend, government spend is very high, and the government spend is the key for the revival of the economy. That's what the government is looking at it. While I'm happy about it, the other point that comes to me very often, people ask me fiscal deficit. This is my theory. Some of the people may not agree. When you are going through the recession, controlling the fiscal deficit is not such a key matter as long as your fundamentals of the economy is very strong, as long as you have got the basis of the economy set right. The government has made all the efforts to control the fiscal deficit to 6.90 as against 6.80, and the amount what is given around 17,000 crore or some amount, which looks to be a little bit higher, but I am not much worried about the fiscal deficit, because if all these spends are yielded positive results, budget should give a good signs for the industry to grow. Now, having said about the certain proposals from the industry side, let me come to direct tax proposals. One thing I realized this, I do not know whether it is planted stories or everybody expects increase in the tax rates before the budget. And the budget, no increase in tax rate, and everybody is happy there's no increase in tax rates. It comes like that. Somewhere that sort of a feeling, psych feeling has been created. This government is going to increase the tax rate from 25 to 30, 30 to 35. There's going to be inheritance tax rate. There's going to be wealth tax will get introduced. All that hype gets created. Capital gain tax rates will go up. Stock market will go down. Every media will carry one news about the increase in tax rate. And finally, on the budget day, no increase in tax rate. Everybody claps around it. This government has done a great job. Probably they're able to manage the expectations of the people pretty well. But having said that, there are certain good amendments. There are certain amendments which are absolutely bad and pathetic amendments, I would like to say. The good amendments, in my view, surcharge capped at capital gains at 15%. This is again one of the recommendations of the Bangalore Chamber of Industry and Commerce. And I'm very happy. Two of our recommendations was accepted in total, and I'm finding that in the budget proposal. Number one, surcharge, we made a statement and made a recommendation, of course, with the support of Mohan Das Pai, where we all worked on paper and we gave a paper to the finance minister that we said that surcharge on capital gain should be capped at 15%. It cannot go beyond 15% the base tax rate. And the government has accepted the proposal, and surcharge on all long-term capital gain is capped at 15%. Though we said surcharge on all capital gain should be capped at 15%. And we also said that rate on capital gains, whether it is a long-term, short-term, listed or unlisted, everything should be brought to 10%. But the government has done first recommendation. I hope the other recommendations will get accepted in the day to come. The second recommendation which he made, I am very happy, is that about dispute litigation management. Today, of course, I hope it gets implemented in the letter and spirit. Today, a taxpayer receives a favorable order from the tribunal, high court, or a Supreme Court. Till Supreme Court serves the order, till Supreme Court passes a judgment, if there is a tribunal order, favorable order from the tribunal or high court, so as under tax jurisprudence, it is binding on the assessing officer. People never follow that, and adjustments keeps happening, and we keep on going on litigation for the ages. 1999, for example, the software case is the same case. There are certain tribunal decisions in favor, certain high court decisions in favor, but the government went on appealing. It went up to Supreme Court. Supreme Court gave the judgment in its favor. The amount of refund that the government will have to give to the taxpayers is phenomenal, because they collected the taxes. Now, this litigation is a very, very challenging for the taxpayers. Cost is very high. And we have been saying that if the taxpayer receives the favorable orders from the tribunal, down the level, no adjustment should be made. Unless it gets reversed at the next level or highest level, then you can go for an appeal. No appeal should be made, that we have been pleading it. And the government made a proposal. I'm happy to note that when the finance minister made a speech, I heard his high court. But when I went through the proposals, it is not only for even the year, it is the tribunal order in favor in 1 year. And if it is a question of law, then subsequent years, the appellate authorities cannot go against the order unless it gets finally reversed, subject to getting clearance from the taxpayer. I'm happy about the amendment. It's very good amendment by which it reduces the litigation issues, which reduces the pendency in the litigation. I'm happy about it. My only worry is that it's a statement of law. What is a statement of law and what is a statement of fact always leaves an interpretation, particularly when there you have got lawyers and chartered accountants. Everybody interprets this in a different way. I hope the clarity should emerge that whenever there is an issue where in favor of the taxpayer you have an order, no appeal should be done. I think welcome amendment, but I hope it should get addressed in the right way. These are two good amendments. There are certain amendments which are not so good in nature. Certain amendments are pathetic in nature. One amendment not so good. One provision, new provision not so good in my view. Though I am not against the taxation of digital assets. I am in favor of taxation of digital assets. But taxing at 30% defies logic to me. When you have got a base corporate tax at 25%, and your capital gain tax rate is 10 or 20%, why tax the digital assets at 30%? That too only with one deduction for cost of acquisition. No other deduction is allowed. Fair enough. But you can't tax at 30%, treating that something a complete category of an income. which in my view defies logic. And therefore, I hope, in fact, yesterday I made a plea that it should not be taxed at 30, it should be pegged at 25%, 20% rather than 30%. It should be done. The other amendment which I am little bit disturbed is amendment to 43B, particularly for MSMEs. Earlier, there was a case that where you have got a loan and you are not paid interest on the loan. Due to the COVID period, the banks were trying to convert that interest also into loans. Under the provisions of section 43B, if interest you are not paid to the financial institution, it will get disallowed and it will get allowed only in the year of payment. So there was an issue whether conversion of that interest also into a loan and therefore it is a discharge of liability, and can you consider it as a discharge and therefore should be allowed as a reduction. The courts have held, yes, it should be allowed as a reduction, it is considered as a discharge of liability. Now 43B amendment has come which says that if you convert that interest into a loan, it is not a discharge of liability and it will be allowed as reduction only in the year of payment. An amendment which completely defies logic to me. 43B never wanted a actual payment. Even a constructive payment is as good as a discharge of liability under provisions of 43B. And particularly in the COVID situation where the MSMEs and mid-market companies, they don't have money to pay the interest, banks have agreed to convert that interest into a principal. You are denying that interest reduction, it hits the industry. And therefore, I hope the government will review this particular provision. There's no tax leakage here. Everything cannot be measured in the form of a tax. When Honorable Finance Minister said the Prime Minister there should not be any increase in taxes, well, the base tax rate has not been increased. No point in increasing the effective tax rate through this sort of amendments, which is not a welcome amendment, is not good for the industry. The third important provision, again, it completely defies logic. It's a revenue-based amendment. It is impacting the pharma companies. It will impact the pharma companies. Pharma companies have got a base by which for all the market spend, they ask the doctors to go and attend certain conferences. They ask the doctors for the prescription of tablets. They give some various equipments to support the tablets for the prescription. Under the Indian Medical Council rules, they issued a circular stating that the doctors should not accept that. And that went up to a litigation, whether it is right, wrong, ethical, until it went to litigation. I'm not getting on the Medical Council litigation. However, there is a tax issue where the pharma companies are claiming the expenditure incurred for the doctors, providing medical equipment to the doctors to support the tablets as an expenditure. There's a dispute. Some tribunals have held it in positive, some tribunals took a different view. What the government did is that stated now that there's a difference between an expenditure and infraction of law, expenditure and infraction of public policy, and expenditure in code of conduct. There are multiple differences. The government has equated this expenditure what the pharma companies is providing for the doctors, equated as an illegal expenditure and said it is not an allowable expenditure. It is like a marketing expenditure. The government failed to understand the markets of the pharma industry. If I'm selling a particular fan and I need to give a dealer incentive to the fan, similarly in a pharma industry, the products will have to be sold by the doctors. Doctors will have to prescribe the tablets. Doctors should know what is a tablet. Doctors should attend certain conferences for knowing that particular tablet. And it is my duty to help the doctors. And you can't equate with this and then deny me the reduction, which in my view is fundamentally incorrect. Then other provision which has come, which is absolutely, in my view, is fundamentally incorrect, is about the new return that has come. I was just speaking with Mr. M.R. Venkatesh before that the government considers only two taxpayers. Few taxpayers are honest, all other taxpayers are dishonest taxpayers. The government never believes there is some category of in-between taxpayers. When I was going through the statement, I remember Nani Palkiwala's statement. India has got three categories of the taxpayers. First category of the taxpayer is a taxpayer who respects the law, howsoever it is bad. Second category of the taxpayer whose response to the law depends on the quality of the law. Third quality of the taxpayer is the one, whatever the law is good, I will not respect it. Palkiwala used to say in his book, our government ignores the first, alienates the second, preoccupied with the three. That's what Mr. Palkiwala said. The comment is equally applicable here also. The government has come out with a new return by which within 2 years, if you are not filed a return with proper income, you can file the revised return within the 2 years. provided you have to pay the tax and the interest. And yesterday when finance minister, I said only tax, and then when I went to the final provisions, if you are filing within 12 months, you have to pay the 25% of the tax and the interest added amount. And if you are paying within 12 to 21, you have to pay another 50%. So effectively, if you are filing that within 2 years, you have to pay 50% of the tax and the interest plus the original tax and interest due on the unaccounted income or whatever the income that you are not filed. The exemptions are that you cannot file the return if there is assessment notice, search notice, survey notice, and other things. If you already come on search and seizure, why should I file the return? Fundamentally defies the logic to me. And that is the entire provision is that you need to come, if you are coming in search and seizure, and by the time you complete my search, it will take time. I need to go through the block assessment issues, and the amount of vision block is much higher. What purpose it's going to serve, I have no idea. Only one thing I can say, it is a VDS in perpetuity, voluntary disclosure scheme in perpetuity for the taxpayers. As long as you make a mistake, you can completely rectify it, which is incorrect. And therefore, the government should look at it, the provision in a different way. The last provision which I would like to talk about is again a new provision introduced with 79A. What that 79A says that if you have any income that has been come through a search, seizure, and survey, and due to that adjustment that you have a losses, you cannot set off the loss against the income, and this income which will give you the losses, you're not even allowed to carry forward. My fundamental right to adjust the business loss against anything, whether the income has come to me or income has come due to you. And problem arises due to this, the discretionary provisions, what the government wanted to avoid is come back. And I'm worried about how these provisions will get misused, because everybody can come and survey. It is not even a survey. Issue a survey notice and deny you all the benefit of losses. And I'm worried about the misuse of this provision that is going to happen. And finally, the government making a sincere efforts on the budget side, on the economy side. I only hope the tax administrators listens to it very carefully, make sure that the pain of the taxpayers gets addressed in the right way. So with these few words, Sunil, thank you so much, participants, for being here. Back to you, Sunil and Tapti.
Thank you, Shekhar. Yeah, Tapti, go ahead.
No, great. Thank you, Shekhar. As usual, a very fiery kind of a keynote addressed as expected from you. If I may now turn to Dr. M.R. Venkatesh for his keynote address.
Good morning to all, and thanks particularly to Shekhar for persuading me to be here this morning. I would have loved to come down to Bangalore, such a wonderful city, but unfortunately being in the COVID pandemic, or at least hopefully the endemic season, next year, if God willing, we will try to make it up to Bangalore for this session. Now, coming to this budget, let me put it this way, that there is a budget for the 21st century, rooted in 19th century bureaucracy, using 18th century economics. This is what I would make of this budget. It wants a vision which is forward-looking, no doubt about it. It talks about something extravagant. We have never seen finance ministers being so extravagant, talking about technologies, talking about big things, and simultaneously not talking about a 5 crore allocation and a 10 crore allocation. Though, of course, she did talk about custom duty of umbrellas. This obsession between umbrellas and walking sticks somehow fascinates me. And these are as if they are interchangeables. Walking stick is an alternative to umbrellas. I don't know, she spent around 2 minutes of 90 minutes on umbrellas. And for what reason, I don't know. But our obsession with these type of nitpicking things doesn't go away. But by and large, I would say this budget ranks head and shoulder above most of the other budgets in terms of its vision. That's why I said it looks positively to the 21st century. It definitely has some vision about 2047, which will be coinciding with our 100th year of our independence. So the Prime Minister definitely true to his habit, has coined Amrit Kal for this. This next 25 years will be seen as some sort of a golden years in the annals of Indian history when it is being written, say 25 years later. So the Prime Minister wants to have an imprint and is entitled to. He has worked hard and has brought some stability into the economy, much of which I think my good friend Shekhar has dealt, but I will deal with just 3 points and I will leave it at that. The first one is what the economic surveys points out is a very bright spot in the entire numbers is 11% growth in the manufacturing industry. 2012, I recall when Dr. Manmohan Singh was the Prime Minister, he made a very important suggestion and policy formulation. He said, if India has to grow, the share of manufacturing to GDP must rise from 15% at that point in time to 25% by around 2022. That is now 10 years. He said we should increase it from 15 to 25, at least a percentage point every year. Now, 10 years has elapsed. We are like the army drill, left, right, left, right. We have done everything and the army drill comes to the same point where it starts and say then disperse. So after 10 years, we are still at 15%, probably less than 15%. Today, the manufacturing share in the GDP is a paltry 15%. Now, what are the implications? Now, you have so many schemes. We have rejigged taxation laws. We have brought in GST. We said this will give a big fillip for manufacturing. We have depreciated the rupee in between the last 10 years. We have relaxed technology flow. We have done a whole range of things. But FDI is flowing into the economy. FDI is coming in. But this is stubbornly cast in stone at around 10%. This is the biggest worry because manufacturing will be your greatest employment generator, tax generator. It will give a fillip to services. It will give a boost to your services. It will also have a backward integration to agriculture. Unfortunately, this is the weakest link in our growth chain, which nobody wants to address. What are the effects of it? If I tell you, it will be startling. 21. This is just last year, we had a trade of around $125 billion with China, of which our imports were $97 billion, exports were $28 billion, leading to a trade deficit of $70 billion with China. Translated to a percentage of GDP, it is 2% trade deficit is with China on a $3 trillion economy. Now, what do you want to do? You want to fight this $70 billion deficit with PLI schemes. And the allocation for the current year for the PLI scheme is 182 crores and next year is 1,600 crores. Now, this is going to generate 60 lakh employment and everybody is gaga about it. The true test of any budget will be when the manufacturing sector goes up from 15 to 25%. Till then, I am going to be doing a Rip Van Winkle. I'm going to sleep. I am not going to comment on anything else because the cumulative success of any government will be when it pushes the manufacturing, social sector, health, infrastructure, any damn thing that you talk about is going to reflect in this number going up. If this number is not going up, then the budget is a failure. For 10 years, let me say, we have been a failure. The second one, which is the elephant in the room, which nobody again talks about, is the gross debt of the government of India. Now, I have people from Msmes, I have people from corporates all over here. Now, there is a sustainable debt for anything that we do, whatever we do. And by and large, if we are solvent, whatever be our assets should match our liabilities or liabilities match the assets. Now, I can have a lakh of debt, I can have a crore of debt, I can have 100 crores of debt. As long as I have some assets and the assets are yielding revenue to pay at least the interest, then I think my business is by and large sustainable. Let us look into the balance sheet numbers of the government of India, which is provided by the Honorable Finance Minister yesterday. The total debt of the central government, we are not talking about banks, we are not talking about state governments, we are not talking PSUs, PSCs. We are just talking about what is the debt taken in by the government of India is around 135 lakh crores. Now, a country can have 135 lakh crores of debt provided it has assets worth 135 lakh crores. It becomes a solvent country. The government of India concedes that 87,740 lakh crores, that is more than 60% of the debts are not represented by assets. So only 40% of the assets are functional, 60% of the debts are not represented by any assets. Of this 40%, there are chartered accountants, they will tell me that no depreciation is provided on the assets, no accounting standards applies. Foreign currency loans are still stated at historic cost, that the dollar was taken at 16 rupees or 30 rupees. Today it's 75. It is still quoted at 30 rupees. And it still contains, the assets contains bonds given to Manipur government and Andaman and Nicobar Islands. And these are the bonds which obviously would have almost, it should be depreciated to zero. But even at the gross level, this number is frightening. Because 60% of your total interest, the total interest is around 9 lakh crores, 9.5 lakh crores, if I can get my numbers right. Interest payment is 9.4 lakh crores.
That's right.
So of which 60%, roughly more than 6 lakh crores, around 6 lakh crores, is an expenditure that we are incurring on interest for which there is no corresponding revenue. Now, what is the 6 lakh crore? 6 lakh crore will be the equivalent to your income tax. 6 lakh crore could be equal to your corporate tax. That is the money that we are spending on interest without earning any revenue. So if we had managed our finances properly for the last 40 years, we could have jolly well abolished income tax. We have jolly well abolished corporate tax. We have jolly well done away with the entire GST. Look at the fillip that it could have given to the economy. But this is what is happening. The third one, which I would like to dwell, and this is a very serious issue which I talked about, the balance sheet of the state of the finances of the central government. The third point that I would like to dwell upon is somewhere down the line, the Modi government believes in one thing: a rupee in your hand is far better spent in my hand. So the golden concept seems to be tax somehow or the other people and try to bring it as a sort of a revenue to the government. And I don't understand this 1.4 lakh crores of collection of GST, which is being celebrated as a national festival in this country, actually means that you are transferring wealth from the hands of the private, which is the most solvent balance sheet in this country, to the most insolvent balance sheet in the country, namely that of the government. Now, this is a crucial ideological issue that we need to address. Whether a rupee in the hands of M.R. Venkatesh is well spent, or is it well spent in the hands of the government? My balance sheet, in fact, I will tell you whether it is Koramangala, Mylapore or RK Puram, it is the household's balance sheet which is the most solvent one. Then there are balance sheet of PSU, banks, corporates, entities, businesses, which is iffy, but by and large they are okay. But the worst balance sheet will be the balance sheet of the state governments and the central government. Now, what we are doing as a philosophy, the government is supposed to see it moves money from the inefficient to the most efficient, and not from the most efficient to the most inefficient. I have strong reservations that money being transferred from the hands of the government, and if you look at it, that the entire money that is being transferred is spent on a host of schemes. And let me take just one scheme on which I would like to dwell, which is the Manrega, which is supposed to be the core of the core schemes. There are 6 core of the core schemes. I don't know what is this core of the core. It may sound rhetorical, but that's how the budgets have defined these 6 schemes. And they have placed 73,000 crores as a budget for Manrega program. Now, we are a $3 trillion economy. Whether one thing that will unite Mr. Rahul Gandhi and Mr. Modi is that both of them have come to a consensus today that we are a $3 trillion economy, give or take a few billions here or there. When Mr. Modi took over power in 2014, given our growth rate for the last 8 years, we were 1.5 trillion. I work backwards and see that we were around 1.5 trillion 8 years back. Go back another 8-10 years to 2005, we must have been around 750 billion or probably $700 billion. And 2005, we introduced Manrega when we were a $750 billion economy. Now the same Manrega is being thrust on a $3 trillion economy. And I'm only reminded of Arthur Levitt's wonderful book, Freakonomics, that economics is a study not of demand and supply as we are taught in school, but it is of cost and consequences. The wonderful phrase that we use in economics is demand and supply. It is not a study of demand and supply. Macroeconomics is about how much you cost and how much is the consequences. Now, when you introduce Manrega, you denuded the farm sector of cheap labor. Then the farmers started cribbing that their income was not growing. Then we started hiking MSP, and enormous amount of MSP was hiked, and this was passed on as a subsidy. I did my PhD only on this farm subsidy bills and farm subsidies in 4 southern states. In fact, probably in 1 or 2 districts like West Godavari, Tanjavur or Gulbarga, you will find farmers at the best knowing 25%. Their knowledge about MSP is only 25% in southern districts or southern states. The entire MSP goes to Punjab, Haryana, parts of Uttar Pradesh. That's why the farmer unrest is there. So you have created Manrega. Then to satisfy placate the farmers, we started paying this, hiking the MSP. Once the MSP started, it started hitting at our fiscal side, and you are getting the entire food grain from one part of the country distributed to the other part of the country, creating logistic nightmare also. So we want to do away with this MSP thing. We started attempting with this farm labor laws. We can't do it. It becomes too political. We are rolling back and we are not knowing what to do. So what starts as Manrega, a very, very noble gesture, basically it is thinking through your heart, not through your brain. It creates this macroeconomic chaos. And I don't see how we are going to unwind ourselves. And once a program is cast in this country, unfortunately it's cast in stone. Take for example another one. I would just look at it as a policy measure. Take NPS for instance. This was fixed as 90 days somewhere in 98 by Janaki Raman committee, and probably 2002 or 2003 we started getting into the 90-day norm. Fair enough. 20 years has passed by. Is this 90-day norm something sacrosanct? Is it that we need not revisit it at all? Should we not look at it and at least do a review of these type of programs or norms that we have set up? I'm not saying that 90 days should be disturbed. I am making it very clear. But I'm saying unless we don't have periodical reviews of various programs, policies, we are going to get stuck in something that once it is brought in, it will never be rolled back. So time for us to see whether Manrega is serving its purposes in a macroeconomic sense, whether 90-day norm is acceptable to us even today. All these things are some sort of a policy that needs to come in along with if you are to move to the 21st century. Now, Shekhar has spoken elaborately on the capital account spending about 7.5 lakh crores. I was just looking at the budget. I was looking at something very spectacular that's coming in. Atomic energy, 14,000 crores being spent. Department of Posts and telecommunications, where it's mostly on telecommunication, probably 5G rollout. They have allocated, hold your breath, 55,000 crores. Defense is 1,60,000 crores. Then on police modernization, 10,500 crores. You would be surprised even today when a murder happens. The police, when it enters the crime scene, doesn't have a standardized kit to collect forensic evidences in this country. And that can lead to acquittal in several cases, and that's what is happening. Because the golden hour is to rush and collect forensic, even that is not standardized. Ministry of Railways has got a whopping 1,37,000 crores Highways 187,000 crores. Only my problem is on all these allocations, I am sanguine about it. I'm happy about it. But if I come from Chennai to Bangalore, the roads are still pathetic. If I travel from Chennai to Madurai, the roads are pathetic. If Chennai to Pondicherry, it is pathetic. Chennai to North, if I travel to Nellore, Gudur and to Hyderabad, it's pathetic. Where are the roads being laid? I just want to know. In the sense, there is enormous spending happening. I can see. I come from Delhi also. Last year we visited to Haridwar by road. It was in a pathetic state. Yes, spendings are happening. New roads are coming in. Greenfield projects are coming in. I'm told, and I can see that. But connectivity to major cities are a big problem. That whether there is suddenly we will see some roads coming in, or suddenly, or these are being audited, and whether there is some sort of proper feedback being given, I don't know, because I am I travel a lot. I find that several parts of the country, the roads are still in pathetic state. Of course, we have improved 20 years back. We have improved. That's not the issue. The issue is about the spending and about the claims of 30 kilometers per day being made by the government. Lastly, I would like to go back to the budgets of 17-18. There were promises about low-cost housing, Namami Gange, Skill India, Sagar Malas, all these things have remained in budget papers. And whether they have been translated into action or still remain in the PowerPoint in the PMO, I don't know. Before I hand over the proceedings back, I just want to say something. What Shekhar alluded to. The finance minister quoted from the Mahabharata chapter 11, Shanti Parva. Little did he realize it was Bhishma who was lying on the bed made of arrows. I would think that the taxpayers today are like Bhishma, sleeping on a bed of arrows, of which I think the new section 68 that she has brought in, unexplained income, and tried to tinkle with the existing provisions, gives enormous moment for me as a professional to be happy about it, because it will mean endless litigation. But as a taxpayer, I shudder to think what could happen to this honest taxpayers. And if I borrow from my father, or if my father gives some money to me, I would have to not only show my source, I have to show the source of my father. My father supposed to sell his shares and get that money. I would have to probably go back to the person who actually sold shares to my purchased shares to my father and show his source also. The way it is being read through for the first blush, it looks draconian. And this is in conflict with the Benami laws, section 2(9) of the Benami laws. And last evening we were having a discussion in the office in the finance bill, and we were worrying about whether you will be charged both under 68 and under the Benami law. This seems to be the norm now by the income tax department. I would like to see if there are some clarification, because on first blush it looks like there will be proceedings both under 68 and Benami law, until you are proven that the original source of the money comes from somebody who has a valid source, legal source, tax-paid source. The department will be relentless about it. With this, I will stop here. I only wish that the announcements are translated into action and there is stricter observance about how the whole budget promises are effectuated. As a taxpayer, I am worried that the way taxes are being collected in this country are akin to extracting wisdom tooth without anesthesia. That is my only worry about the taxation issues. With this, I will stop.
Thank you, MRV, and thank you, Shekhar. That was such an exhaustive and a deep analysis of some of the things that we don't really read about, but we definitely need to know. We had actually originally planned on covering a broad overview of the direct and indirect tax provisions, but we're giving it a go by because views from the panelists and from eminent speakers such as yourselves are going to be much more useful for our audience, is what we thought. So I would go straight into the panel discussion. I'm also going to be, doing a very brief introduction to the panelists, all of them very eminent and known to all of us. So we have, again, Dr. MRV, who's an advocate, Mr. Kamal Bali, President and MD, Volvo Group India, Mr. S. Vaithishwaran, Vice Chairman and MD, Manipal Education and Medical Group, Mr. Siddharth Mittal, MD and CEO, Biocon, Mr. P.V. Srinivasan, our mentor, Indirect Tax Expert Committee, BCIC, and the partner and chief mentor of PVS Advisors, Mr. Rajagopalan, CFO Microland. Of course, Shekhar is going to be on the panel as well. And we have as the moderator for the panel, Sunil Dhareshwar, Head of Tax Infosys. Over to you, Sunil.
Thank you. Thank you, Tapti. Good morning to everyone. Thank you for all the participants who joined the morning today. I know it's a busy day for everyone, and still you've taken time out. Special thanks to all of our panelists for having joined the BCIC post-budget analysis. Really, it's an esteemed gathering, and I thank each and one of you. Mr. Venkatesh and Shekhar, thank you very much for your opening keynote. And my comment on both what Dr. MR and Shekhar mentioned on the budget, not really one being about taxes, but being more of policy statements. And Dr. MR mentioned about going back 3 years earlier and looking at what was committed, whether it's Namami Gange, etc. And I kind of agree with what they're saying, and especially for all of us who are from the corporate, when we do a planning for the next year, all of us know that we are first asked to provide how we have performed in the current year. We look at what was our plan and budget and where did we do at actuals. So there is always, all of us know there is an actual versus budget or actual versus plan. And I think that in my mind should be what the budget should be all about. We just forget about what was said in the past, and we just make the vision statements and policy statements for the future. So I do agree that I think the way we should see the budget should be very different from where it is as of now. In the interest of time, what I want to do is just run through a few slides which talks about some of the key numbers from the budget, some of which I think Shekhar and MR have kind of alluded to. And a few thoughts, which I will mention, but which I'll again pick up as we go through the panel discussion. So let me just kind of present the few slides to start with. So I think this is the overall numbers from what I would call as the P&L for the next year. And if you actually look at it, if we look at one element of it, which is the revenue receipts, we've seen a significant growth. If you look at 22 revised estimates over 21, in fact, the revised estimates, in fact, is more than 16% as compared to budget. But next year, it's just at 6%, higher from now. So I think the question to be asked is the government, in some ways being very conservative on the revenue receipts? This is the one which I think everyone has been speaking about since yesterday. If you look at the capital expenditure at 7.5 lakh crores, as compared to what the budget estimates of last year were, it's higher by about 34-35%. Looking at the revenue and expenditure, again, Dr. MR referred to it, and we'll pick this up later. A large part of the revenues is coming in from borrowings, and what is of more concern is the interest payments, which is almost 20% of the expenditure is being met towards addressing the loans, etc., that have been taken over the years. And in my mind, this is a concern as we move forward. Possibly one of the things which is a good item is if you look at the fiscal deficit, obviously 9.2 in 21 was significantly high on account of the pandemic. We are at 6.9 as compared to 6.8. We're looking at 6.4 as we move to the future. There is a thing that, one is a dot, two is a line, three is a trend, and hopefully, this will go down towards the 4.5% in 26, which is what the government is, targeting towards. Deficit financing, I think a large part of the deficit is being looked at by market borrowings. We did see a significant, reaction in the bond market yesterday, given what the market expectation was of what the government would borrow and what, came out from the budget. And again, this is a concern, like I said, in terms of servicing these borrowings in the future. And finally, on tax receipts, little surprising. And like I said, on revenue receipts, it looks at the lower end. And when you look at the GST collections, which have been increasing year on year, month on month, and going into next year, the way the trend looks to be is to be flattish to lower. So looks like the government is, continuing to be very conservative on its collections. So this was primarily the tax, items, the budget items, which I wanted to kind of run through. So let me get started with the panel discussion. What I want to do is just to get some few opening, comments from all of our panelists, and then, go around with each of you all with specific comments on the different industry sectors. And I do know Siddharth needs to kind of leave at about 10:45. So let me start with the, Siddharth, on what your opening, views are. And just to put it in context, I think in my mind, the FM, like most people have said, has not been, very populist in spite of, several state elections being round the corner, has tried to maintain a fiscal prudence and looked at significant spend in capex for growth and recovery. I'm not sure as to what your views are. There is a different school of thought which says that the better way of looking at recovery and growth is to drive consumption and reduce tax rates, put more money in the hands of the common man, possibly give out some amount of doles, etc. Because infra spend is at a large level medium to long term, and there is a need for a near term recovery in the economy. So this would like to get of views in your views on the budget and the approach that has been adopted. Siddharth?
Sure. Thanks, Sunil, and thanks, BCIC, Shekhar, Tapti, for having me over. It's a great pleasure, and good morning to everyone. Very, insightful talk from MR and Shekhar, and I think it's, there are different perspectives that were shared. And since yesterday, after the budget speech was delivered by the finance minister, we've been hearing and seeing a lot of people talk about the views, but I think there is nothing right, there is nothing wrong. The way I look at it is at a very broad level, the finance minister has struck the right chord on various accounts. And for the first time, we have seen a very futuristic approach or a thought process that has come out, whether it's on the environmental side, whether it's on boosting the production, whether it's on boosting the capital infrastructure, or on education, or on technology. Now, all the right things, which we all will realize is something that is required in a long run, maybe 2047. And if we do not start these efforts today or the thinking, we'll never get there. So I think to that extent, at a very broad level, right policies, right chords being struck. Of course, it was not a populist budget, as Sunil, you mentioned, which was what everybody was thinking, that in the hope of, elections coming up in many states, that it could be tended more towards those states and the populist budget. But I think the way it is today, the infrastructure is an important.
You're on mute, Siddharth.
Sorry, if I look at some of the success stories, and especially of nations like US, whenever US has gone into depression or economic recession, finally the government has opened up huge spend on infrastructure, and that has revived the economies. Now today, when I look at the focus on job creation, which would happen at a mass scale because of infrastructure spend, which will ultimately put the money in the hand of poor people or below the poverty line people by creating these jobs, will of course add a lot of disposable income in their hands, which would kind of have a cascading effect on many other aspects. Now, lowering the tax, of course, income tax would benefit only a certain section, because we know that in India, what percentage of population is actually paying income taxes. That's more the high class and the middle class. But when I look at the agriculture sector, when I look at the below the poverty line or lower income group, that's where we see that there is a lot more help required in terms of job creation. And to that extent, a 35% increase in capital spend would definitely give a boost at that level. So I personally believe it's quite a balanced budget. Maintaining the fiscal is again fiscal deficit is an important challenge. So at 6.9% this year, going to 6.4, and a long-term aspiration of 4.3 are all the right things. And now what we have to see is how the budget is being implemented, because I think in the past we have seen many such announcements being made, but implementation on the ground has been very slow. So that's something that we have to look in the years to come, that how all these things pan out. But overall, I would say a good balanced budget for the year.
Thanks, Siddharth, and I think you're right that there's never a right or a wrong answer, when it comes to things like the economy, especially. I just want to stay on Siddharth. Like you said, you need to move on. So specifically on the pharma sector, the government has said its real intent is to not only make India the manufacturing hub, but also has spoken on innovation and R&D, etc. And I know the pharma industry has for long been asking incentives on R&D. Are you disappointed that this is something that the government has still not agreed to? And is there anything else that you believe that the government could have done in encouraging R&D, especially in the pharma sector? And given what we've seen of the pandemic, where health is a core area that we should be spending money on as we go forward.
So personally, if you ask me, I'm not a big supporter of R&D incentives, because that's a matter of past. I think my boss might not agree with that, but of course, we have all been disappointed that there was no announcement on the R&D incentive. I personally support RLI, like production link incentive, which was announced by the government for our sector. We have actually seen a lot of companies who were sitting on cash, not making investment decisions, have started investing in production and increasing the capacities. Now, what I feel is production or the capacities go hand in hand with research. And one of the things which we've been working with the government is to have research-linked incentive and to promote cutting edge technology, research in cutting edge technology. Because when you look at pharma sector today, of the world, as everybody says, 4 out of 5 pills in the US come out of India. We supply 20% of pharmaceuticals to the US in terms of value. Now, all the drugs that we are manufacturing today, mostly the generic drugs, do not require high level of investment, are not high risk-taking activities, R&D activities. But in spite of supplying 80% of the volume, we are just capturing 20% of the value in the US. The reason is we are supplying something which is not innovative drug. And as a country, the focus in the sector on innovation has been very low. And that's why something like research-linked incentive, which promotes high risk, high cutting edge science, technology driven research, we will never get there. And I think that's where, and it's not only about big companies. If I look at large companies still have financial bandwidth, whether it's strong P&Ls or strong balance sheets to take limited risk. It's also about multiple startups, right? Today, you look at the service sector or when you look at startup ecosystem, the growth, the contribution to economy that we have seen over the last, I would say just 5 years has been phenomenal. That's what has driven growth, put wealth in people's hand. And that's exactly what we have to do in research. And now maybe it's beyond pharma research as well, now whether it's defense research. So at least one good thing is on the defense side, allocating a good 25% of budget for domestic research with private companies and startups. Now, what we were hoping to get is something where companies are incentivized to start thinking, start taking risk, start investing in these cutting edge technologies and move up the value chain. Otherwise, we'll always lag behind. I mean, again, I'll take an analogy of China. China was always a supplier of the world, was supplying, again, in our industry, a lot of the raw materials, chemicals. And over the last 5 years, at a very rapid pace, the country has gone up from just being a supplier of chemicals, raw materials, to having many, many new drugs being invented in China. China is now world's second largest pharma market after US. And a lot of it has come out because the government, the provincial government, the central government has supported the local industries with various innovation packages, incentives, of course, as a part of overall package. And that's led to the local companies now starting to take risks beyond just doing the routine kind of manufacturing they were doing. So yes, that's something that we hoped for. And good thing is while we didn't see any announcement in the budget, the government and various ministries are quite open to hearing the views of the industry. And I'm assuming that somewhere they need to get a little bit more convinced, and which does take some time and some amount of lobbying and discussion. And there are multiple ministries involved. For us, it's not as simple as various other industries. And to get everyone aligned and on board might take some time. But again, I'm hopeful that maybe we missed the bus this year, but hopefully next year we should see some announcements being made to promote research in our sector.
Yeah, thanks, Siddharth. And I guess what we say in tax, the gap between what the minister's vision is and what you have with the bureaucracy possibly is the same across industries as well. So maybe more work with the bureaucracy is the way to kind of get to RLIS as similar to PLI, and hopefully that we'll get there soon. Thanks, Siddharth. Let me move to Vaiteshwaran on your comments again related to both pharma and education, given Manipal's presence across these two large industry segments. So Vaiteshwaran, just in terms of a few specific comments which I can get along with your general view, I think the pandemic actually brought out the significant lack of basic healthcare in this country in the last year and a half, and I think the government did work urgently on a very immediate basis to fix things. But going forward, do you think the measures that the government has announced is good enough to meet this huge gap that we will still see between demand and supply in the health sector? And the second one, in the budget, I think one of the common themes, which even Shekhar referred to in his opening address, was use of digital and technology. In fact, the most used word by the FM across the budget speech is actually digital. It appears almost 36 times in her budget speech and all. And in specific, if you look at education, most of the measures that have been announced is all to do with digital and technology, whether it is the 200 channels that they want to set up, and a lot of other things in terms of increasing the use of technology for educations in the primary sector, etc. But in your mind, do you think the government will have enough funds, and does it have the capability in terms of using technology to reach the large masses of this country? And education is something that is required for much larger populations which currently do not have access to even certain basic education, let alone using digital and technology. So would like to get your comments on both these sectors and your views on that.
Thank you, Sunil, and good morning, everyone. Thanks, Shekhar, BCIC, for having me over. Very involved and interesting opening notes by both Shekhar and MR. Since MR, you did allude to most of us in this panel having directly relatable to the corporate world, let me put my perspective on the overall from a corporate side. So as I see a budget should really be like a strategic plan of 5 years that gets presented to the board of companies by the management with a specific milestone goals on year. And shouldn't get really seen as a one-off initiative, which someone talked about, not in jest, but I remember I used to attend Mr. Palkewala's, and that was more interesting than the union budget itself for many of us. And we grew, most of us in the southern part of India grew listening to Mr. Palkewala rather than the union minister at that point of time. So that became some sort of an event by itself. But I think the country is maturing. We shouldn't really be looking at a secret sauce for a country of this size on a budget speech that an FM makes. But it should be seen over a period of 5 years. Directionally, are we heading where we want to do, etc. So like most of the speakers have said, I would believe that on an overall, the government, should I say boldly, has taken to sagacity prevailing over political opportunism. With elections around the corner, it would have been too tempting, and pressures from the governments and states going for elections on the FM and the Prime Minister to dole out handouts, which they can take to town and get seats. But I think they have not, yielded to those. Not in the interest of time, not really taking on to. I think everyone has said, and I concur with the views that spending on capex is strengthening the country on a long and sustainable basis. Again, from an industry standpoint, many of us would agree that CEOs who were rewarded quarter-on-quarter results, both in terms of their bonuses, etc., all of us were guilty of ignoring the future for present. So those classical differences between urgent and important, we were all forced to take over the urgent and see we get brownie points, and those 3 envelope management theory used to prevail, that we'll leave the 3rd envelope for somebody else to come and clean it up, but let me get away with my bonuses and what I mean. So that's really the corporate, and as a positive step, maybe Parliament is the ultimate medium which is responsible for the country when the budget gets presented. So maybe people like MR and others who have a strong view which is heard in many quarters must also be talking about having quarterly reports by the FM tabled in the parliament to talk about status reports. And it need not be only on the annual plan of the country, it should be on the strategic initiatives of the country. Like he said, and a small difference to what MR said, that I do travel too, and it's not that the roads are that bad, MR. Roads have improved for sure. Roads have improved for sure. We've got very good roads. I drove down from Tirupati the day before yesterday. Fascinated to see that 6-lane ride to Chittoor from it was almost like a runway. And I'm sure there are many pockets in the country which have roads of that nature. But I agree with him that we must hold the government accountable when you make large expenses in that we need to see outcomes. And if the outcomes are not going to be in a year, it is all the more important that those projects are going to be tracked and monitored. And like the example he cited of 2017, nice projects to be initiated and quickly buried. But net, I would still believe that it's a good, bold, directional budget. I was tempted to use the word hockey stick, but after he talked about the walking stick and this, I refrained from using any more sticks in the budget. But I think it's a good budget. It's a good budget. Happy with what the government has done. And another last point before the two specific questions you said, I agree. There is a Tamil proverb which talks about even if the God is willing, the pujari is the gatekeeper. So you do have, the interpretations that the government bureaucracy does, which has a classic example of killing the vision and ensuring that we get stuck in red tape and, a myriad of rules and regulations. But net, happy with the budget and hopeful that things will happen. So Sunil, specifically on the healthcare that you raised, just for all of us to get onto the same page, if you look at the indexes of doctors per 1,000 people, if you look which is at 0.74 doctors to 1,000 people in India, hospital beds is at 0.5 beds for 1,000 people in India. You have 1.7 nurses for 1,000 people in India. All these numbers are way below the WHO prescribed numbers. So clearly there is an issue of supply, which is not good enough. And if you look at doctors as an example, we have 85,000 medical seats in the country. 1.5 million eligible students appear for these to go into this 85,000 seats. Clearly, it's going to be a long time while the Prime Minister's vision to put up medical schools in different parts of the country is laudable. I mean, putting a medical infrastructure, you need 5 teaching beds for every medical seat in the country if you want to make a good clinician. So it's going to be time consuming. It's not a digital theory that at the start of a button you can get across and do this. Having said that, the rules again become more innovative. The monolithic Medical Council of India finally was buried last year after 50 years in this country. And NMC was set up and there was a lot of hope and this thing, and we continue to believe that it's in the right direction. Classic example, NMC came out with a regulation as recent as 2 weeks back, I think. It said that for all these good, qualified, competent Indian young students, boys and girls who want to become medical doctors, come back and serve in the country, but are not in a position to get medical seats in India, there's an opportunity for them to go and study outside, either in the South Asian markets or on the western part of the world. Interestingly, the new Medical Council has put up a regulation that these students who go abroad to study can come back and practice in India only if they have done the entire tenure of the 5 years of their MBBS course in a single location. I'll take a minute to explain the foolhardiness of this rule. Your medical science education is divided into 2 parts. The basic sciences, which students do 2.5 years, depending on the curriculum, and then there's a clinical part of the education, which is the second 2 years. Best colleges in the globe, Harvard, Johns Hopkins, Oxford, Columbus, everybody encourages their students to do the clinical part anywhere in the world because students get a global opportunity for residency and they become medical doctors. But by just putting in this law, which is so inimical, no Indian student who goes abroad now to do their medical science can come back and practice as a doctor in India. So, and look at nurses. I mean, we have such a large demand of nurses, but by our ability to treat them in terms of wage parity, quality of life. We still are the largest exporter of nurses from India, while India suffers from nurse requirements in the country. So these dichotomies needs to be fixed. The vision is a laudable vision, is appreciated. The leaders in the government have a right focus and right vision, but somewhere the execution falls between the cracks. So to answer your first question, I think the supply side needs to be strongly fixed in this country. I would have expected, like what the Prime Minister announced in terms of IITs and IIMs some time back, which is again a good step forward. If he had announced that he would have a nursing college in every district in the country, with let's say 200 nurses and funded by state and center or private enterprise, as the case may be, over the next 4 years, these are long-term investments. It's like planting a tree. You know that the fruits of the tree is not going to be there when you're around, but it is going to help the country. I think some of these natures would have been very good. Your second question is on education, which is again, very, very relevant. Our gross enrollment ratio as a country, we are somewhere in the 25-26%, which means that we are 25 eligible students getting into higher education for every 1,000 students in the country. The global average is at 45, 46. Western Europe and North America is at high 70s. So if you need to increase your GER from 25% to 35%, which is the vision of the Niti Aayog and the erstwhile planning document, we would add something like 3 million students every year into the higher education pool for the next 10 years. Clearly, the number of universities, we have close to 1,000 universities in the country, 50,000 colleges. Even if we were to build a college every other day and a university every other week, we will not be able to handle this need of higher education I'm talking of specifically. Clearly, there is a need for digital, a hybrid between a digital education, a virtual education, and brick and mortar education is important. I'm happy that the focus of the government is towards digital, there is specific things. I have to read the details. They've also put up something like international universities can come and set shop, gift the city in Ahmedabad. I don't have the details, but it would be interesting to see whether institutions of eminence which have been granted by the country, including like ours, would have the same advantage as compared to a Stanford or a Harvard putting up an institute in, let's say, the gift city. But I will hold my views on that till I read the fine print on that. I am not yet clear on how it works. They're talking of 270 and odd channels, etc. But on this, I think more as a parent, a grandparent, I think the government must do first to get kids back to school. This is criminal that we continue to indulge in technology at school level kids when we know 80% of our children in the rural part of the country do not have access at all for any form of technology whatsoever. So I think unless we figure out, certainly 5G could be a step in the right direction in terms of getting this across, but our higher focus should be on what are we going to do in a here and now basis to get our children back to school. And if there were addresses to do on those issues like ensuring healthcare insurance, as an example, for teachers in primary schools, in rural things, maybe additional softs to them, maybe to those children coming back with a nutrition meal, midday meal scheme, anything that is important to get our children back to school. What we are doing is cancerous post to the pandemic that has happened, and all of us don't realize this thing. The 10% of people like all of us in the panel can indulge our children into tablets and getting them to do schools, but we are not the real India, and it is very, very important for us to acknowledge the fact that we are doing a great disservice to the small children of our families in the country if we do not get back to school. And I'm disappointed that directionally the FM did not make a very, very strong message, given that we are just trying to come out of the pandemic into an endemic stage. I'll stop here, Sunil. Maybe in the later point of time, there are questions.
Yeah. Thank you, Vaiteshwar. In fact, I did want to ask you about the international, institutions being allowed to set up in Gift City and your comments on that in terms of level playing field, etc. But maybe, for another day. And on your comment on roads, I agree with you. I travel to Tirupati very often. I used to take more than 5 hours about 4 or 5 years ago. I do it less than 4 hours now. So I think, we are moving in the right direction. It started, I think, with when Vajpayee set up the Golden
Exactly.
Quadrilateral.
Golden Quadrilateral.
And it is a long
Please
journey
invite
for us.
MR to come on a road trip with us, and hopefully he'll change his impression.
It's a long journey. I think we should get more better and efficient so that we can do things quicker and faster, and that's what we should learn from. And I think lastly, I do agree that for all of us in the private sector, we end up living quarter to quarter in terms of performance and delivery. And in some ways, I do think then the government of India should also be looked at as a listed entity and get them to also present every quarter on how they performed against what has been budgeted. I think that's possibly also the way of ensuring there is accountability in the government. Thanks Vaiteshwar very much for your comments. Um, Kamal Bali, let me come to you and cover the both manufacturing and MSMEs, and also your initial views on your budget. A lot has been done, frankly, I think, on the manufacturing and MSMEs. There's always a long list of asks which are there. And I think they've done significant in terms of a 68% procurement budget of the defense being more for domestic. They've extended the timelines for starting of operations for manufacturing industries, for with the 15% rate. Um, they're looking to ensure that payments from the government, a large extent, I think about 75% of the payments on running bills will be paid within 10 days. They're going to use a lot of digital in terms of procurement from the government so that there is more transparency in that whole process as well. So there's been quite a bit that has been announced. In fact, again, like I think Shekhar and MR mentioned, they've increased the credit guarantee limits amounts for MSMEs. Do you think this actually would spur the investment in the private sector? And I want to kind of go back to what I mentioned on the government borrowings. The government borrowing is now significantly high. Do you think that would squeeze out the liquidity for manufacturing and MSMEs to borrow? And also, are you seeing green shoots in investments happening? Because all of that would happen only when capacity utilization has reached a particular threshold. So would like to get your view on, the budget, specifically on manufacturing and MSME and investments, that you think will that actually happen in the near term or in the next, 12 months from where you see things right now?
Yeah. Thank you, Sunil. Thank you, Shekhar and Tapti and BCIC for having me on this very interesting panel. And good morning, good afternoon, dear friends on the panel. I think the opening batsmen, Shekhar and MR, have, along with the Vaideshwaran, have already hit centuries. So very little left for the middle order and the tail enders to do now. So thank you very much. It was some very interesting insights from all of you. Let me start with saying that the union budget, which was presented yesterday, let me look at the backdrop. So it was presented in the backdrop of 24 months of pandemic, challenges on fiscal balance, increasing capex investments into physical and social infrastructure, augmenting consumption and boosting manufacturing, supporting exports, creating jobs. All sorts of priorities were there in front of the finance minister, as rightly so. So it was a tough tightrope walk with competing priorities. So given this background, I would like to say that the budget has been very progressive, imaginative, and growth oriented, which touches all socio-economic segments. I think it touches almost all socio-economic segments while embracing technology and modern tools of governance, as Shekhar rightly alluded to. The budget has rightly allocated the highest ever capex of more than $100 billion, up 34% over last year, aimed at creating and improving our logistics system infrastructure, primarily through the PM Gati Shakti National Master Plan, as well as investing into social sectors of health, education, women, housing, and the needs of some of our aspirational districts, very, very clearly defined as 112 aspirational districts. So it is important from medium to long term also to rein in inflation, and therefore a very good pathway to also fiscal deficit was also discussed. So now let me come very, very specifically, while we have talked a lot on the budget, various provisions and other things, let me talk about 2 or 3 interesting things which touches manufacturing in particular. I think the first thing is the spend on the logistics. While our logistics cost has been one of the major challenges for us in the past. Our logistics cost is about 14% of GDP, whereas the average is about 8 to 9% globally. And this makes us uncompetitive by about almost 5 percentage points, which is a huge, huge, huge number. And I think the work which is being done in this PM Gati Shakti program is exactly to fix this. It actually strikes at the root of the challenges in logistics which we have had. So this will actually reduce our logistics cost. This will therefore also reduce the supply chain challenges which we have, also prepare us for better exports, and also reduce structural inflationary challenges which we face from time to time. And I think that's something very, very important, freeing the supply chain with good logistics. This clearly will make Indian manufacturing a lot more competitive. And I think that's the key. Indian manufacturing has to become competitive, and the time is now. I want to really step back a bit and talk on what MR talked about, and I completely agree with him on the needle on manufacturing contribution to GDP hasn't moved in the last 20 years. It has remained stuck between 13 to 16 percentage points. And even today it is at that level. Now, what will change it? I think what will change it is we have had this golden opportunity as a consequence of this pandemic, where there is a rebalancing of global value chain happening today. Almost $4 trillion of global manufacturing is expected to be rebalanced over the next 3 to 4 years. Out of $15 trillion, today $4 trillion or $5 trillion is accounted for just by one country, China. And there is clearly a China plus one model. I see it every day in my sector. There is a huge demand for rebalancing this $4 to $5 trillion into other countries. Of course, there is competition, but India stands a very, very good chance. So I think this is the time where, therefore, it is very timely that things like PLI and all have come. So we can get big anchor investors into India so that manufacturing can get a leg up. So I think, to my mind, that is very, very important thing. The other point is that today we are at a level of about 70 to 80% of capacity utilization on an average in the industry. And new private investments kick in when you cross almost about 80%. If you have 70% capacity utilization along with animal spirits, you will invest more already. Otherwise, at 80%, companies start investing in capacity addition. So you will see that happening as a consequence of all of this. This will create more jobs and kickstart a virtuous cycle of growth, more consumption growth. So to my mind, this is a master stroke. And for me, the biggest takeaway from this budget is the improvement in logistics, and this will really make a huge difference. The second is push to clean, green public transport. There's a huge mention about that as part of urban infrastructure improvement. I think it has got lost in the discussions. So there is a huge provision provided for this, made for this, and I think this will make a humongous difference because our cities are going to become more and more populous. By 2047, we expect 50% of India to live in urban infrastructure. We don't want our top 100 cities to become like what a Bangalore or a Delhi is in terms of congestion. So that urban planning is very, very critical, and a lot of focus by Mr. Hardeep Puri is going into urban infrastructure improvement. So that's the one. The other thing which I note is interoperable battery swapping policy, which has been promised. And this is going to be, to my mind, a game changer in terms of introduction of EVs. Because today the biggest challenge on EV is the range anxiety. And if you can have a charging stations harmonized, irrespective of what vehicle you drive, which brand you drive, which battery you use, if you have the swapping mechanism, which is harmonious, homogeneous, I think it will reduce a lot of range anxiety, and it will pave way for making EV get introduced much faster. The fourth thing which I notice, and very interestingly, is government's interest and inclination to use sustainable solutions in public procurement policy. And that's a very, very welcome change with due credence to clean green tech, circular economy, and quality, instead of just the L1 approach, which we have been used to living with for so many years. You are L1, you get the order, and others can get out. Totally compromising on technology, on the green and clean technology, or whatever other parameters are. So this is another big one. This shows the mind shift in the government. So these are some of the points which I wanted to make. So my point is, a lot of anchor investors will come into India, not as a consequence of this budget. Budget is a one-day event, but a lot of things happen around the year. A lot of engagement is happening with the government, and I think Shekhar would agree that whether it is CII or BCIC, the kind of engagement this government, I have to admit, that has had with industry is phenomenal. And I think we have been talking to the government regularly, and I think a lot of stuff is happening on that front. So let me step back for a minute on manufacturing, because that's an interesting part. And I want to come back to where MR left. If you look at the year 19, I just pulled out some data when MR talked about this. In 1978, both China and India, our GDP size was $300 billion each, give and take couple of $1 billion here and there. $300 billion in 1978. Today, China is 18 trillion. So China has grown 60 times in the last 4 decades, 60 times, whereas India has jumped barely 10 times in 40 years. We are from 300 to 3,000, and China is from 300 to $18 trillion. What happened? What happened to each of these countries? I think China was clearly, very, very clearly, the 3 success factors were clearly manufacturing, galloping manufacturing. And this was on the manufacturing and exports on the back of infrastructure, more infrastructure and infrastructure. So I think their claim to fame was only infrastructure. Create infrastructure, produce goods, sell to all over the world. And they became the factory of the world. And they today hold 30, I mean, couple of years back, they held 30% of manufacturing market share of the world. So I think this is something which India needs to repeat. India, our manufacturing must gallop, and I think it can't remain at 15%. It has to gallop to 25% of our GDP. Exports have to grow exponentially, and agriculture must transform. And I think these are some of the challenges which for all of this, infrastructure is the most important. And I think this budget, along with the previous budget, directionally is very clear that we need infrastructure, and infrastructure related to logistics in a very, very big way. And to my mind, that will be the future direction which this country has to follow. And I think having donned the thinking hat, the FM has done a good job. The focus now would shift to implementation, to execution in a very, very big way. And that's where we fail many times. That's that's a weak point, and I think that is something which we need to really excel on. I think overall, to my mind, a very, very directionally good budget, and I think this will spur manufacturing into big time. Support to MSME has to be increased. It maybe not happened fully in this budget, as Shekhar agreed, but I'm not worried about that. We can go back to government and say, so these are some of the things, these are some of the support MSME needs, and I think government will not. I mean, they've already started initiatives like Samarth, which is basically supporting MSMEs on Industry 4.2, 4.0 transition and all of that. I think those are very, very good steps, and let's continue to do that. So I'm overall very bullish and very happy with this budget. I personally believe that this will have a huge multiplier effect on jobs, this infrastructure spend, and also kick in a virtuous cycle of consumption growth. Thank you.
Thank you. Thanks, Kamal, very much. I agree. The government, has been listening to all industry, segments and has been very engaging. That's very positive. And also the Prime Minister's Gati Shakti, program, I think is all inclusive because it looks at, ports, it looks at waterways, it looks at roads, and they're looking to have one single platform, which connects everything. And which is very necessary for manufacturing, because you need to be able to ensure that from your manufacturing plants, which might be in a rural area or somewhere away, you are able to connect internationally, which would mean that you need to get your products out to the main cities, to the airports, to the ports, and then ship it out, as well as even for input, not just from the manufacturing side, even getting inputs in a more efficient, cost efficient manner is helpful for the industry. Thanks, Kamal, very much for your comments and inputs. Let me move now to Rajgopalan, and I just want to make one comment. I think everyone is so fixated with cricket that every anecdote is between opening and middle order and tail. I think we should switch from cricket to football or soccer, because I think at the end of the day it is the team which matters, and offense and defense is equally important. So everyone is equally relevant and important in a panel discussion. So I think we should switch.
Maybe kabaddi. Maybe kabaddi. Kabaddi is more an Indian sport. We should talk of kabaddi. People are promoting it.
Anything.
Yeah.
I will go for anything other than cricket. So let me now go to Rajgopalan and cover the IT and startups. And kind of given that I'm from Infosys as well. So Rajgopal, I think if I look at the budget, there's been talk on startups, but far and few in between. While we can say digital and technology is all about startups, and therefore there's a significant reference to it. But specifically in my mind, I don't think there's much which has been done. Purely if you look at the tax part of it, Shekhar mentioned the fact on the capital gains, kind of things have not been fully addressed. The startups have been allowed 1 year additionally in terms of the benefits that they would get the 3 out of 10 years. But in the past, the government has been very supportive of IT, especially in the services sector. All of us had enjoyed the SEC benefits. And IT and startups, in my mind, is one area sector which brings in the maximum forex into this country, either in terms of export benefits or in terms of investments. Do you think that the government should be doing more from a IT products perspective, and also from encouraging startups? They did make a very policy level statement saying that they will set up an expert committee to look at what needs to be done for startups. And in my mind, I thought the meetings with the PM himself had with the startup community, I would have thought a lot more would have been mentioned in this budget. Seems like it's been pushed over into the future. So your comments on what you would have liked to see, and also on the budget.
Thank you. Thanks, Shekhar, Sunil, and Tapati, and BCIC for having me here. just because you wanted me to switch to a non-cricket analogy, let me just say it's more like an elocution contest where, people have already delivered their parts of elocution. Now we need to probably change the voice or probably sing a song and so on, so forth to impress the judges. Now, having said that, I don't know what PVS is going to do after this, but just from a general perspective on the budget itself, there are some roles which are going to draw criticism irrespective of whether you move right or move left, right? The role of the FM is definitely one of those things. Irrespective of whatever you do, there is going to be some segment which is going to be getting a perception of second-hand treatment or being left out. And therefore, they're going to say, I could have been taken care of as well. But there is only that much that can be done when you have to balance the budget. Now, the one thing that is striking for me, this is not an IT sector view, but as a generalist view, is that this budget has come at a time when the informal sector has been fully decimated across the country. You have tons and tons of units which have closed down. Tons and tons of people have been displaced from employment. They have lost livelihood. They have shifted from urban centers to rural centers with probably no roadmap for how they are going to earn over a period of time, how they are going to make their life comfortable over a period of time. So I would have expected definitely some direct measures which could have helped this informal employment generation in this budget. And that could have been done best by either supporting a lot more on the MSME side or probably getting into more DBTs or concessional treatments on the GSTs in terms of collections like what MR and Shekhar said. Probably that's the big mess that we have done in the current year. Let's also understand one thing, while all of us have understood the impact of COVID, next year is going to be a year where inflation is going to raise its head again all over significantly than ever before in the last few years. Second, interest is going to go up significantly from where it is to in the future, right? So from those two perspectives, the MSME segment is going to come under a lot more pressure than what it has been used to do in the last 2-3 years. So instead of being extra conservative on assessment of the tax potential, if they had taken a slightly higher nominal base for the tax collections and provided additional monies towards supporting the informal sector or employment generation in itself, probably would have been better off. I completely agree with the other panelists that with the spend of about 7.5 lakh crores on the infrastructure and capex outlay, jobs will be created, but that's going to be one type of a job. But what's required is at the grassroots level, and therefore that should have been attended to with a lot more outlay is my view on the budget itself. But barring that, I think it has been a very, very bold budget. And for once, we should compliment the government for not buckling under the international rating agencies' pressure in trying to contain the fiscal deficit beyond a point. They have said that they will contain it to 6.4, but 6.4, whether it becomes 6.6 or 6.7, it really is not going to matter in the long innings of a country. So that's my general view on the budget itself. But going to the specifics on the IT industry, let's put the industry in context, right? We are talking about an industry which is about just slightly short of 200 billion in terms of export revenues, right? It's a huge elephant. It's a 100-pound gorilla. How much more the government should be supporting this industry? I don't think this industry needs any more support. This industry should not be given any more SOPs at the cost of somebody else. So I think it is time for the IT industry to stand on its own legs. Just in comparison, the other day I was reading a report that Indian IT exports is more than the amount of petroleum that's being exported by Saudi. You can understand the impact of this. Therefore, the dynamics of this industry is much, much bigger than even the oil industry of KSA, which is striking. So I don't think the IT industry needs any great support. And thankfully, it has not been provided also in the budget. It would have been a crime if it had been provided. With the tax rate as low as 25%, I don't think we can even ask for anything more. But having said that, there are only a couple of things that needs attention in the government and that needs to be resolved. Maybe PVS and Shekhar may have taken steps in the direction by providing ideas to the government, which is the way all of us are working has changed significantly, not only the services industry, but all across, right? So we still have issues coming up in many jurisdictions on the interpretation of the SEZ rules, on whether the work from home is going to continue forever or not, or whether people should be pulled back into the respective offices and so on. So certain ground reality in that should have been recognized, and a facilitation should have been done, not a concession, but probably a statement saying, hey, you can have a hybrid method from now onwards on execution of IT services, for instance. A clear statement of what the future holds in terms of the model of working is one. Second, the world is moving significantly into cloud and cloud-related technologies. Gone are the days when you're going to have huge data centers sitting in the enterprise world. You know, the networks are now moving more and more towards centrally operable, centrally controlled, and so on and so forth. So technology is undergoing a significant shift, and that's going to be the way people are going to be consuming technology in future. Therefore, there is a shift in the ground, and that needs to be recognized by the government, and therefore some kind of recognition of the newer technologies and newer realities of technologies should have been brought into the, you know, some of the asset definitions and all kind of stuff probably could have been better and could have been, you know, something that can pave the way for the future and the reduction of disputes and so on and so forth. Startups, since you mentioned, Sunil, I don't know how much a government can actually take credit for a startup environment. If India has created 42 unicorns today, I don't know whether any government can actually take credit for specifically doing something or not doing something to make that 42 unicorns, or whether that 42 can become 50 and so on and so forth. The only thing that needs to be done by the government is to make the registration and ease of doing business, which they have been talking about for some time. So they should just step away from the startup environment. They don't have to necessarily do anything specific, but I think they have already brought down the surcharge on the capital gains of the shares in an even field for the unlisted entities as well. So that should be helpful. But I don't think there's anything specific that the government would have done for startups. And I don't think they should do it either. That's my view.
Thanks, Rajgopal. I agree with you. I think the IT industry has, benefited over the years. The only, I guess, the point is some of the larger companies can be managed, but I'm sure there are a lot more smaller companies that possibly may be struggling at this point in time, given of the pandemic situation. So that was where, I was wondering if the government could do something more, but I think it's other sectors may be more deserving at this point in time. Thanks, Rajgopal, for your inputs. PVS, let me come to you. And, I think would like to hear from you on, from the indirect tax perspective, what did you see as positives? And given the past on, SCZs, your comments that you may have, because they did mention about completely revamping it to a new legislation, including states, etc. Anything that you would like to see in the future, contours of that? Your comments, sir.
Yeah. On the indirect tax space, I find two dominant themes. One, the indirect tax, as far as GST is concerned, will be driven fully technologically. Virtually, there's no discretion for availing ITC. No, the rules of what documents should be maintained, the goods and services should be received. All those conditions are there on the recipient of goods and services. But as far as availing credit is concerned, now it is wholly automated and it will have to be picked up only from the portal. So that anything which is available as a discretion for availing an ITC, that has been taken away. The central theme of all GST assessment is that it is automated availment of ITC. If that is the theme which is taken, many amendments have been carried out wherever discretion was available, those sections have been omitted, and therefore you just pick up what is given to you as an ITC and take it as a credit and working. The other aspect is that there is a revenue buoyancy now at 1,40,000 crores, which was celebrated even during the budget speech. I would possibly think that the government has reserved certain rights for itself through the law to restrict the availment of ITC at a given point in time. So it is now assuming 100%. Tomorrow they can calibrate it and say it's only 90%. Another month they can calibrate it and say it's only 80%. So there are powers which have been granted to the under the law to restrict the amount of ITC which can be availed from time to time. So it is no more that you are entitled to 100% always. If the buoyancy comes down, maybe they can calibrate it and make it available less. One good point which I thought I will make it as far as indirect tax is concerned is that the wrong availment of ITC earlier certainly attracted some amount of interest. What they have corrected is availment and utilization. So if there is no utilization and a mere availment, this is possibly a little positive things I look at it, saying that a mere wrong availment would not result in an interest payment. Availment and utilization of a wrong availment, that would possibly result in some kind of a interest payment which is there. There are many deadlines which have been relaxed, many things which are ending in September, all those things have been extended to November, possibly understanding that there are accounts which are getting settled very late. So there should be an opportunity to avail ITC a little later. GSTR2, which never came in force, has been removed because that means that you don't have to look at GSTR2 anytime. It was ill-conceived possibly and it has been removed now. There is also some kind of conditions which can be associated with filing of GSTR1, that is the output tax which we file. Those are all certain restrictions and imposed conditions can be imposed by law. I would think that the GSTR is now based on the confidence that the technology will work, and that is the confidence which is emerging from the budget proposals which have come, that the technology will drive the entire compliance regime as far as GST is concerned. And the amount of credit which can be availed, everything is going to be monitored through technology. That's the feature which I pick it up as far as GST is concerned. As far as customs are concerned, it is also going to go through a faceless regime, I find it. There is also be an enablement of proper officer. That means investigation wings can be called a proper officer. That means investigation capacities are being built up a little larger and wider. There is a rate restatements. Many imports which are now, somebody talked about BIS balance, what's called export import deficit as far as China is concerned and many other countries are concerned. Some goods which are originating from certain geographies, I think there's an attempt to find a duty structure in such a way that the domestic industry is, I would not call it protectionist, but certainly duties have been enhanced on certain goods. Umbrella is a representative of those goods, and that is why possibly it has been mentioned. I thought only one point which I will make, which again I'll pick it from Dr. MRV, our keynote speaker today. Are we having a bureaucracy of 19th century and a vision of 21st century, which is the budget which has been created? Some indications of that are there in the direct taxes. I'll just take the privilege of mentioning one or two of that and see that how we are, the thinking part of it is embedded in those provisions. Last year was an amendment on reassessment, and there was a claim that we are bringing early certainty by bringing it to 3 years instead of earlier 6 years. And the 10 years is an outlier and it would not normally apply. The amendments which have been brought about this year, it virtually looks like that is an amendment that 10 years is the standard time for any reassessment. And it's not 3 years. The 3 years is a very small set of taxpayers may benefit from 3 years with less than 50 lakhs of income. I do not know how that 50 lakhs also will be spread over how many years if you look at it. Essentially, I would say that the uncertainty with regard to conclusion of assessment has been enhanced through the budget and not reduced through the budget, because the yardsticks for reassessments have been widened from what it was there. Mere book of entry, is good enough to open a reassessment on the only structure that the assessing officer thinks that it's in the nature of an income. So I will say that is little worrying. Number two, there is also an enhancement, section 68, Mr. Dr. MRV talked about. I don't want to reiterate it. I would possibly say the technology thrust has been enhanced even in the Income Tax Act. Last one, the burden on the compliant taxpayers has enhanced compared to the entire system is that I will load the burden on the compliant to catch the non-compliant. The TDS provisions being broadened so widely is to possibly say that the compliant will be burdened with extra burden so that the non-compliant can be caught through that mechanism. This works well for some time, but there is a cost of compliance which enhances on the cost. So I would say a corporate maybe look that 25% look very good on the record, but I would say cost of compliance on the compliant will have to add at least 2-3% because a lot of costs are being incurred to ensure that these compliances are met. I would possibly say there's a cost of effective tax rate which we are all paying through the cost and now will be about 27-28%, even if you are in the 25% bracket. So I will say that's how we have to look at it. And this is how the summary is that. So old 19th century thinking of bureaucracy is very visible in the finance bill, which is 200 pages, when the finance minister did not have more than 2-3 minutes to spell out on the budget proposals.
Thank you, sir. I think the way the rules are done is using the least common denominator, where the 1% doesn't comply is used as the yardstick to make the other 99% to do what is needed to catch hold of the 1%. I think that's the standard rule that the government is using. I know we're just running out of time here, but I just want to get back Dr. MRV, which I wanted to ask you to get your valuable insights and inputs from a economic perspective. And you did allude to this in terms of the borrowings and the not having the equivalent assets. Is that a matter of concern that we should have? Like I was saying, even in this budget, while I know there is a need for infrastructure spend, we can push ourselves in terms of the fiscal deficit. The borrowings are significantly high, and this is good for now, but a problem for later for future governments, where we have at least 20% of our expenditure going to meet and servicing the interest cost. Is that something that we should be concerned about? And do you think that the government is on track to meet its fiscal consolidation target, which they have set out of 4.5 for 25-26? Just if we can get some quick, comments from you on this, and possibly we'll wrap up after that, given that we're kind of run out of time.
The answer to, shall I, Shekhar?
Yes, sir.
See, the answer to this is a very simple one. Last 2 years have been some sort of an outlier, so you can't really talk about fiscal deficit when you're drowning. So yes, you had to give a go by, and that's what the government did. And in good measure, we had built up, we had to do around 4.5 lakh crores of food grain distribution the year before. So all those things added to the fiscal deficit, and last 2 years, I wouldn't crib about it. But this 135 lakh crores built up has not happened in the last 2 years. It's a 40-year-old malaise that is affecting our macroeconomic functioning. And when it comes to, we were able to somehow or the other manage because of enormous amount of household saving getting banked in scheduled commercial banks. And from there, you use the SLR route to swipe off this savings to fiscal, provide this funds for your fiscal deficit. But for this domestic saving, this economy would have gone kaput, say, in the 80s or 90s. Luckily, we are still surviving because of the lady in the household maintaining and a very frugal lifestyle that we all are accustomed to. But everything has a shelf life. Everything comes with an expiry date. This fiscal profligacy of the center and the frugal lifestyle of the average Indian that somehow or other balances at the macro level seems to have come to its full circle, has run a full circle. And I would only suggest that whether it is going to be sustainable for say next few years is going to be a big question, because the way it looks like it's becoming unsustainable.
Okay.
So that's my worry also.
Thank you. Thank you,
You want
MRB,
us
for
you to the participant for any questions?
So I think we've gone through the questions which we had.
Only one question, Kamal.
I like to
Only
open
one
up
question
and
to
ask.
Kamal.
Yes, yes, Kamal.
Yeah, Sunil,
Yes.
Sunil, just one request. The presentation which you had briefly shown, the budget numbers, can you send it to us? I found it very interesting.
Sure. I will definitely circulate that. I will
Can
send
you? Yeah.
that to you.
So you have our email IDs, and if you can.
To Kamal. I have only one question to Kamal. Probably is from auto industry.
Right.
There is a little bit of people say that demand for the auto industry has come down, particularly in the sale of cars and the sale of vehicles. What used to be earlier, now it has come to 1/3 or 1/4. And with the new battery changing policy that is coming up and scrappage policy, still the discussion is on. When we are talking about the infra and the roads and all that stuff, that should also be coupled with a good growth for the auto industry and the manufacturing, because that's another big industry which creates a lot of employment generation. Where do you see that is going, Kamal, in this budget?
Yeah. So Shekhar, this is a very, very interesting and a big topic we will have to discuss in detail at another occasion. But actually, it is really redefining the future of mobility. Okay. So just to let you know, the future of mobility is not to count the number of vehicles which you sell. It is going to be the revenue per customer. So over the life cycle of the vehicle. So that's the new mindset. So just let me tell you, in case of Volvo, today we do of our revenues, 80% is the product sales, and 20% is the services, which includes aftermarket and other services. Whereas in another 6 years to 7 years time, our goal is to be 50% services and 50% products, which means there are a huge amount of value added services. A new economy is getting generated as a consequence of connectivity solutions, as a consequence of freight management, cargo management, optimizing those. Just to let you know, a truck on an average in the world carries at any point in time only 15% cargo. 85% it is moving air.
Okay.
That is the level of inefficiency which is there. So there is a huge opportunity to monetize this inefficiency in the system by aggregating the cargo, by doing all sorts of data and AI techniques, tools. And this is a huge economy which is getting built around. So maybe 5 years from now, you will see the revenue of an automotive company maybe 100, but vehicles sold are lower than a company which has a revenue which has got a lower revenue and higher numbers. So it depends on your business model. And I think more and more value added services is going to be the name of the game. 50% products, 50% services. And services is a huge bouquet of activities and opportunities which are going to come up. So that's broadly the direction, but very interesting. Let's have a session on this for industry sometime. Yeah.
I will invite you. Definitely, you are always part of BCS, though you are not part of MC and all, your heart and soul is in BCS. So I'll always invite. I can take liberty with you, Kamal. Thank you so much.
Sure.
Thank you, Kamal. We'll take a few questions now from the president. Yeah, Tyagu, go ahead.
Hi, Sunil. Hi, Shekhar. Hi, Kamal. Hi, everybody. And I think the logistics sector, which is proposed, a lot of proposition has come in, and reorganizing or process re-engineering the logistics sector will actually create, huge opportunities for the embedded systems to, flourish, as well as lean manufacturing. And as you know, Kamal, we have spoken many times, the North was the South divide. Every lorry which comes down from the north, the cost of transport is 6 rupees. Going back is 3 rupees per kg. So if the south keeps picking up, as we heard in some of the channels yesterday, The manufacturing industries are all booming in South, but I mean, North consumption is happening in the South. This could also change the growth both in reducing the cost of infrastructure of logistics as well as increasing more job opportunities.
Absolutely.
Thanks, Tiago. I've got, I think, Parshuraman, can you ask your question?
Yeah, very good morning to all the panelists. A wonderful session. First of all, congratulations to Sheikh and team for the wonderful panel discussion. One of the best panel discussions, I would say, in the last couple of days I've been hearing. I think very, very inclusive and completely holistic and very mixed and very fantastic viewpoints. Hearty congratulations. So this is on the IT sector. My specific question is with the federal
Yes.
increase the rates in the next 3 months, the direction is coming out very clear. So the kind of investment going away from countries and the rupee probably depreciating is on the one side, and the digital what the finance minister has spelled out 36 times yesterday. So seeing it, do you think that the Indian sector is going to get one more fillip in the next?
MRV, can you mute MRV? MRV, you can mute.
I think this is to any of the panelists. So IT sector is going to probably getting a very, very special fillip because the digital services, the digitalism in various sectors, the postal offices, post offices getting digitized, then the rural urban economy getting digitized. I think this is a huge thrust coming on the IT sector, which probably many of the speakers have not spelled out in the last couple of days. And added to that, for the Indian services with the federal rate increases, rupee depreciation, what's the kind of overall impact you see?
Sunil, I'll just go ahead and probably I can request Vaiti, Kamal or Raj to speak about it. First, your point is very valid, and I've been having this view right from the day. And in fact, I shared with you a couple of days back also when in our MC meeting.
Yes, Shekhar.
Technology industry. Earlier, technology industry in India, people looked at a service industry. Today, it is moving beyond service industry in technology. And as Rajagopal said, technology industry has come to a stage where it can stand on its own. Second important aspect of technology industry, big organizations will go bigger and mid-sized organizations will also grow bigger. There's a huge opportunities coming up because everything is moving around technology. In fact, despite the COVID, the Indian economy has done very well. It's only due to the growth of the technology industry. And in my view, everything is moving around digital. Every business is moving around digital. In fact, from a Deloitte perspective, I can tell you, you don't get the right people in the technology industry because the people always be taken by a startup at a price which is mind-boggling price. So that industry is poised for a bigger growth. The only thing I'm hoping is that, as sometimes I always go back to Mohan Das Pai and Bala's statement in Infosys, government did not understand what is software. By the time they understood what is software, software has grown faster. Same thing. I would like to believe that the technology industry should grow faster. Otherwise, the government will put some hackles which affect the growth of the tech. That's the only fear I have personally.
No, I just want to add, Shekhar, great point. Honestly, I have been benefited by both the worlds. Sunil, I'm not aware, I'm sure you're aware, I was a part of Infosys some time back. I know. So there is earlier the premise or the view that there is companies which are in technology and then there are the rest. That was a bipolar sort of a difference. Let me give you from my new world, my education world, and it couldn't get stauncher than this. When the pandemic hit, I had 275,000 students across 6 continents studying in my universities and colleges, and overnight they all had to stay at home. Overnight they had to stay at home. We continued seamlessly teaching 275,000 students, including 40,000 students in medical education, technology supported online classes. And when I say online, it's not PDF that you convert your content into PDF and teach. It is a proper learning management system which includes instruction design, it includes pedagogy, it includes the faculty getting trained to teach in a digital world. So I think Indians in particular and the world at large have seamlessly adopted to living in a digital world. Digital touches every part of what we have to do. So whether it is education, whether it is hospitality, whether it is anything else, it works. Having said that, while subjects like artificial intelligence, blockchain, etc., are really changing the rules of the game. So this thing, with no offense intended to the IT champions in the panel, you would have also seen in the match between Medvedev and Rafa Nadal on the fourth set in Australian Open when Rafa was down 2-1 and Medvedev was serving 40-0, the artificial intelligence gave predictability of 98% win to Medvedev. And we knew what happened in the results. So we should not succumb to becoming a slave for the digital, but as human beings, God has bestowed us with knowledge and embracing abilities for so much superior things happening in the world. My submission would be use technology to leverage human skills and not the other way around.
That's what, Vaidhi, you're right. In fact, I was joking that with some of my partners group yesterday. Artificial intelligence cannot replace the human efforts, commitment, and will to succeed. Artificial intelligence, predictive analysis cannot predict everything. That's what I was about to say.
If stockbrokers and bookies had bet money based on AI on the Australian Open, they would have won broke. The fact is that human intelligence and the human skills of Rafa Nadal proved otherwise. No, lighter vein aside, I think it's a great subject, Mr. Parshraman. I mean, I can tell you again, just 30 seconds. We are today doing clinical teaching for medical students on anatomy and surgery over digital modes, because my students who have to do their clinicals in eastern part of the US, where the pandemic continues to run very high, New York City as an example, students are not in a position to go to the hospital to learn. We are able to teach them simulated exercises on digital, which outside of the human interface is on par with what they would have learned with in a classroom or in a hospital environment. I think that is the power of technology that has come up in the world today.
Wonderful, wonderful. Thanks, Shekhar, and thanks, Vaidishwaran. I think wonderful insight. But just a lighter note, when I was sitting in one of the conferences, World Conference in Kyoto, I was very fortunate to be a part of some 5-6 Nobel laureates in the team. The topic of discussion was what is the substitute for human brain? How do you reproduce the human brain? I think we had almost a couple of hours discussion. Finally, I think the answer was we are not even achieved 1% of the replication. I think infinite potential. And one of the interesting questions asked, you want to move your hand or leg or any part of your body, how that communication happens? I think no computer can substitute or no linkages can match it. Just in a lighter vein, I fully endorse your views, Mr. Vaidishwaran. Thanks a lot.
Thank you. Thank you.
So Parshuram, there is enough room for genuine intelligence also. Instead of artificial, yeah.
Yes, Mr. Bali. Fully agree. I think we say the common sense is most uncommon. The sixth is
On a lighter note, yeah.
So Sunil, Shekhar, are we coming to this thing? Which
Yes,
some of us have a hard stop.
I have no role to play. Whatever Sunil says, I listen.
I will. Yeah, I think we've completely run out of time, and I think we don't have questions as well from the participants. So first of all, I want to thank it's been very insightful and valuable inputs from all of the panelists, and thank you everyone again. I think everyone who's participated has benefited from this. Thank you, Dr. MRV. Thank you, Kamal. Thank you, Vaidishwaran, Rajgopalan, PVS. Siddharth had to leave. Thank you very much. And last but not the least, Shekhar, thank you very much. Let me now hand it back to Tapti to conclude.
Yeah, Sunil, you've said it all. Almost 2.5 hours the day after the budget. we've had time from our esteemed panelists and from our members. Just cannot thank you enough for all of that.
Only 1 minute, Tapti, if you don't mind. 1 second.
Right, Shekhar? Yeah.
I'm not thanking, but I should express my sincere gratitude to Kamal, Vaiti. I know Vaiti is going through a tough time on different side. Poor guy, he resisted his cough without when he was. I know that poor guy. I know Vaiti, all the challenges that you. I know Kamal, your busy schedule, PVS, Raj. Raj was really good. Shekhar, I got all the budget meeting. I said, you come for this budget, then you go for the other budget meeting. That's why I pushed Raj. MRV, he never said no to BCIC and to me, and also to Siddharth. Just thank to all of you personally by me. That's all I want to do. Go ahead.
Thanks a lot.
Thank you, everyone. Please stay safe and all the best. Yeah.
Rupa, you are sending a mementos to everybody.
Thank
Rupa?
you. Thank you, everyone.
Yeah, we'll send the mementos to every one of you except PS, because me and PS are part of BCIC. We are not eligible for mementos, but all of you others will get. PVS, Sunil and Tapti will not get the mementos, but all of you will get the mementos.
Thank you, everybody, for being a part of the panel. Thank you.
Well done.
Have a good day and stay safe.
Bye.
Sunil,
Bye.
please send the
Great job.
presentation.
I'll do, Kamal.
We will send it to you, Kamal. Don't worry.
Thank you.
Thanks a lot, Sunil and Tapti, for taking
Thank
this.
you.
Thank you.
Thanks, Shekhar.
Bye-bye.
Thanks, Tapti.